Hello, scientists. Welcome to Updates from the Lab, a weekly Twitter space for Osmosis. We'll get started in just a moment.
Hi, everyone. Thank you for having me today.
Hey, what's up, Red?
I'm
or
good. I'm
Réda?
good. Réda. Some friends call me Red, so you can call me
Okay,
Red.
it worked out.
Yeah, it worked out.
We're just waiting for Sunny, and see. It looks like Unity's here. We do have the topic of incentives on our minds, and we will be discussing that with Réda from, is it the Key Foundation? Am I saying that, pronouncing that correctly? With the Key Foundation.
Key Foundation, exactly.
And then, yes, as I said, we've got Sunny, Unity Chaos. I think this is Unity's first time on Updates, and all of you. So if I know folks have a lot of thoughts and questions about how we're going to handle and adjust incentives going forward on Osmosis, and I'm excited to discuss it.
Can you guys hear me?
Yes. Hey, what's up, Eddie? Welcome.
Hey. I was just had to grab my old phone because my new phone won't let me talk not robotic.
Right. That's a that this is a surprise, because you had just tweeted saying that you'd be in the background, and I was like, well, and now you're here and your voice is intelligible. So
yeah,
sometimes the old phone works.
I think going forward, I'm probably going to take a back seat and just kind of catch these recordings and let you and Sunny kind of riff.
Okay.
With all the guests, but yeah, I guess without further ado, take it away, guys.
Thank you, Eddie. Hey.
Hey.
So we embark again.
Indeed.
What?
Hey, Sunny.
Hey. Oh, hey. So
should I get started with some updates?
Yes,
maybe?
let's start with some updates.
Cool. Yeah. So let's see. What are the main big updates to inform everyone about? The upgrade. The next upgrade is still targeting mid-April. In just an overview of like the things that are expected in this next upgrade. There'll be a big AMM refactor, which will change a lot of the interfaces for a lot of AMM. So if you have any sort of tooling like a front end or a script that you wrote or something like that, expect that to change. And so check out the GitHub or join the Discord integrators channel for all the details on that. One of the main things that this AMM refactor will enable is making it easier for us to add more types of AMMs going forward. And so the big one will be a stable swap. So that will be, a AMM that's well optimized for trading stablecoins against other stablecoins with like lower slippage. So, expect to see that up pretty soon. And then, ideally, probably some of the first usage of that will be like UST paired with, USDC that's bridged over from Ethereum. So I think that will be a big use case. It'll also include the multi-hop swap discounts, which were approved by governance. I think maybe like one of the most highly voted and like approved governance like features that I've seen in governance so far. That was cool. And then finally, it will include a number of the custom CosmWasm integration. So this is the work that the community pool basically gave a grant to Confio for doing. And so a lot of the pieces of the stage 2 of that grant are going to be landing here. So that's basically a customized version of CosmWasm that works like very seamlessly for like integrating with Osmosis AMM. So you can like make call if you're writing a CosmWasm contract, you can make a call to the AMMs with like one line basically. So that will make it much easier for people to be developing CosmWasm contracts on Osmosis. So yeah, I think those are sort of the main big things for the upgrade. Other things coming up are the Frontier site should be up tomorrow. And so with that, there'll be probably a bunch of assets integrated into there tomorrow. We know that there's been a number of issues with the info site, and those are currently being worked on. So, the Imperator team, which is the team, the Osmosis core dev team that works on all these sort of data integration as well as the info site itself. They're sort of migrating to a new infrastructure. Their current DevOps infrastructure is well designed when Osmosis was this small niche new project. But now that we have as the number of users is increasing and people are querying it, the data infrastructure, and so basically what the Imperator API does is they are, there's certain data that you can get easily from the chain, but then there's also they're taking the data from the chain and putting it into a database that's gives you all sorts of more nicer data, such as historical prices and volumes and all that kind of stuff. So that infrastructure around that API, it was it was designed earlier when we didn't have as many users and as many external things using the API. So, for example, CoinGecko and a lot of the dashboards and stuff are starting to use this API more, which is just putting more load on it. So we're migrating to a more sort of distributed setup. And so, all the issues with the loading time of info sites should be resolved in the coming week or so. I guess, let's see. We're working on a bunch of new JavaScript libraries that will make it easier to interact with Osmosis. So if you're building a front end or anything like that, just keep a lookout for those. That will make it much easier for people to build new ways of interfacing with Osmosis, as well as integrating it into other apps. So you can imagine that you can have a widget on different sites that allow you to just easily interact with Osmosis, not always just going through the primary front end. And then, I guess the last thing is just on a public, a notice thing was, the Juno chain halted yesterday because of a bug, and so IBC deposits and withdrawals from Juno are also paused. And so you won't be able to deposit more Juno or withdraw any Juno or any of the CW20 tokens from Juno that are on Osmosis currently. And then, I think the Juno community is still sort of debugging and figuring out the problem, as well as figuring out how to go about solving it. There's some talk that they might have to upgrade the chain itself to a new chain ID, so it'll be Juno 2 rather than Juno 1. And if that happens, that means that Osmosis would have to make someone would have to make a upgrade IBC client proposal on Osmosis, so that way we upgrade the whatever this new Juno 2 chain is, takes over the IBC client of the Juno 1 chain. So we're keeping an eye on the situation, and we'll probably learn. We'll come up with a more solid timeline for when those will be reactivated once more information is figured out.
So Sonny, that IBC client upgrade would come from one of us or a community member, or somebody would have to put up the proposal.
Yeah, I mean, it would probably just come from someone it'll probably one of the validators, or maybe someone from the Juno core dev team or something like that.
Right, that makes sense.
Yeah, but it would be a proposal on Osmosis, as well as it would have to be on every chain that Juno is connected to.
Right.
Mm-hmm. It'll be interesting to see the MEV games that happen as soon as Juno reactivates, because the price of tokens. So there was this happened on Solana as well a couple months ago when Solana was down for a while, where as soon as it turned on again, there was all this MEV because all the prices on all the dexes were stale prices. And so, yeah, as soon as Juno activates again, there's going to be probably a lot of arbitrage opportunity on Juno swap and stuff to re-arbit to the Osmosis prices. So that'll be a fun thing to watch, I guess.
Yeah, I'm curious how that's going to play out.
Yeah, I mean, this is kind of why we at Osmosis we are very focused on this vision of app chains, where it's and also why we made the decision of making CosmWasm deployment on Osmosis be permissioned, because it's to I think that it's to prevent issues like this from happening on Osmosis, where there was a malicious contract that was deployed. I mean, this is due to a bug in CosmWasm, but it it was able to be deployed because there was a malicious contract that was deployed. And I think for infrastructure that's as important as a DEX, and that is as needs to be online, otherwise it causes all these issues. That's why it's important to make sure the Osmosis chain is sort of very lean in what it does, in order to so we can minimize the attack surfaces and vulnerability points of such a high important use case. So yeah, I don't know, a little bit more evidence that the app chain thesis is correct.
Yeah, this is confirmation that the permissioned CosmWasm was definitely the right move so far. Oh, I had somebody had reached out to me on Telegram about the Ion DAO, Ion developments. Is there, I think there's a quick answer to that.
For me, yeah, I mean, as far as I'm aware, so the AlphaWorks team has finished their they had finished their contract and were ready to deploy, but they actually were using a fork of the DAODAO V1 contracts. But we were told by the DAODAO team that it is highly suggested that we instead use the V2 contracts, just because they are much more sort of secure, as well as much more modular and customizable. So right now the AlphaWorks team is sort of working on migrating to the DAODAO V2 contracts. So that's sort of what the current status on that is.
Okay. Oh, and I guess that makes me wonder, is DAODAO involved in this? Is that a CW20? Is that involved in Juno, or is that?
Mm-hmm. So DAODAO is not really. It's not a CW20. It's a framework for making DAOs on CosmWasm chain. So they have a set of standard contracts that anyone can use in order to launch a DAO on the CosmWasm chain. So yeah, I mean, the DAODAO team, I think, is mostly working on Juno contracts, but the CosmWasm code is pretty generalizable and can be used anywhere.
Okay. Yeah, and that's it. Okay, got it. Yeah, I think there was just the overlap of the team working on Juno. I thought it was related, but it's an independent chain.
No. So the DAODAO is not a chain. It's just it's not even an application. It's literally just a a set of open source contracts that anyone can use in order to deploy their own DAO contract.
Okay. So right, it's what you said. It's a framework for making DAOs on CosmWasm.
Correct. Yeah, and it's being built by a team that's sort of led by Jake, who is one of the Jake Hartnell, who's one of the core developers of Stargaze and Juno.
Okay, got it. Well, Cosmos family gets around.
Yeah.
Can I speak?
There's a great interview with Tony Daddy on the Yellow Wire with Jake going over DAODAO. If anybody has time to check it out.
I agree. I concur. Definitely worth checking out the Yellow Wire episode with Jake Hartnell.
Hey, can I speak for a moment?
Sure.
Hi.
Hey, Tony. First of all, from all Osmosis community, I have to thank you for building this great app that we are using. As you know, some days ago, there was a problem with IBC transfer from Atom and Luna blockchains. I think this is very bad for us. What do you think about that?
I actually am not too familiar with the specific issue that happened. Does anyone have any more info on what was the issue and how long it was
I'm not sure. I saw Larry posted something about a bunch of validators on Terra went down for a bit. I don't know if that had anything to do with it.
Yeah, I actually don't know too much information about it. It seems like it was probably resolved, but I can go look into it, and if it's an issue, we can come up with an idea of how to solve it. Or it might have just been some sort of, just note that the IB still, for how mature IBC is, it's still very developing. A lot of the relayer software is still relatively pretty beta, and so there's all often issues that are getting ironed out over time. And I think downtime of IBC channels has definitely gone down since a year ago when we launched. But yeah, so there's still probably just some sort of issue with relayers or something, and being resolved now.
Yeah, that's correct.
Cool.
Okay, thanks for the input. Let me say your name right, Aiden. Shall we dive into the incentives conversation?
Yeah, sure.
So,
do you want me, guys, to introduce?
I think it is probably good to bring you up, Réda, and maybe if you can tell us a little bit about Key Foundation, if that's cool, Sonny, or unless you had some other idea of how to get into this. But yeah.
Specifically Prop 188 too was.
Yeah.
Prop 188 is definitely what kind of sparked this conversation.
Absolutely. Well, thank you all for having me today. I'm happy to participate as a participant for the first time to the Osmosis updates from the lab. Basically the story that happened is that we've been integrated with Osmosis since November with two pools, Osmo XKI, UST XKI. So just to give a bit of context, what is Key Foundation and what are we building and working on? We're working on bridging traditional finance with decentralized finance. And most of the work that we have been doing today is delivering a private bank called Club that is live since September last year. We have around 450 members with a global net worth of 5 billion euros that participate in opportunities, pre-seed startups, private sale, etc., etc. so this is the context of what we are building, and now the vision is getting clearer and clearer. So we're starting to build a bit more on our clients, and yeah. So in February, so the story starts in February. In February, we've seen a lot of volatility on the markets, and we started to see that even though we didn't have a lot of sellers of XKI on the market, we still continue to see the value of XKI falling down and falling down, even when like Osmo was recovering, we were not recovering as much as Osmo was recovering. So we ended looking up in the chain, and we saw that we were getting kind of it's normal on a DEX. You have arbitrage bots, so they started taking advantage of arbitrage. And we said that we had to build an arbitrage bot. So there were some market makers that were offering the services to do that, but their fees and cost of service was horrendous. So we said, hey, let's do it ourselves. And part of the process of building that bot is understanding how those other arbitrage bots were working. So we were kind of doing transactions ourselves, different kind of strategies to see how it's going to work. And one of the last tests that we were doing was obviously generating a lot of volume for a certain period of time, for 2 weeks. And yeah, what happened is that Jacob, as a good believer and watchdog of the Osmosis chain, saw that and was like, it was obvious we were using two wallets, and there is no obfuscation on what we were doing. So basically, it was quite easy to see, and it was saying that we were doing wash trading, which is not what we were doing. We were actually, so the intention was to test on the market live some building blocks of our arbitrage bot. So basically, what we got to understand is that maybe, so this is where I'm not an expert on how the incentives work on Osmosis. What we did in March is that we added some external incentives, and then we put together a prop to match the external incentives. So we offered somewhere around like 100% external incentive value on our pool. And I think, so we matched them out. And so for us, there was no like anomaly on what we were doing. But obviously, maybe, and this is where maybe Unity Chaos can explain, the volume that we were doing was taking massively into account into the internal incentives. And this is where I think that maybe it sparks two topics at the end of the day. One, how do the incentives align with the interests of the chain and of the health of Osmosis, but also does not incentivize this bad behavior from the projects, from the pools. And the second thing, I think, and it has been discussed a lot, actually we are quite aligned with what the Prop 188 was saying. It's just that I wish we would have discussed it before and just like maybe diffuse the thing before it would become a drama. And I think that in the Cosmos ecosystem, we don't need any more dramas, and we're all here to build together and to create value all together. And so basically the actions that we took is that we stopped the devs. So now we're not working anymore on our arbitrage bot before we find a way of maybe excluding our technical wallets that still need to continue to work on the chain, exclude the volumes from the incentives computation. Actually, we're quite open to finding the right way of doing things. So yeah, this is quite the context. I don't know if you guys have something to say or a question or anything like that, but I'm open to answer to any question.
Well, thank you, Réda. I personally been trying to pull together some sentiments from the community, which I'm sure you've heard based on your drama concern, and I think we're all as far as I can tell, we're figuring out how to negotiate this process as we go. There's not like a proper, other than Commonwealth, where a lot of pre-governance conversations are happening and intended to happen. This is one of the forums, I guess, is updates from the lab. So I've pulled some questions, and I think I would like to hear from Unity, as you asked. But one of the questions that stood out to me, this was from Crypto Gardener on Twitter, who was saying that if testing inflates the trade volume and results in the pool receiving more rewards, then maybe that's a reason to turn off incentives. But why not do this in a test net, which it sounds like that's what you're doing. But anyway, I would like to open the floor up to anyone who has questions, and also to bring Unity up if you would like to chime in.
No, I think the question is quite legitimate here. Why don't we do it on a test net? But the other arbitrageurs are not on test nets. They do not care of any test net. So if you want to operate against them, you need to see how they operate on the mainnet. But I do agree that inflated volume from development actions, if they are considered as a huge part of the incentives, should not be taken into account. So I don't know if there is a way to exclude some kind of wallets. If you can announce them and say, hey, these wallets are for testing, devs, and everything. Do not take the volume into account from these wallets. Maybe that could be a good starting point.
So I guess my general take here is I think it's we probably have to redo how incentives works anyways. It's been something that we've been kind of putting off for a while. Currently incentives are based off of volume, but that's not really a great way of doing it just because it is so easily gameable. And I think that switching towards more less trivially gameable metrics is probably the right way to go about it. I think that probably something one is maybe moving more incentives back towards staking, which would, and because of superfluid staking, that kind of is effectively making it more based off of TVL. The other thing is, I think that the incentives really should start to be more, currently they need to be more specific on even on a per pool basis, right? So currently we provide these multipliers based off of, basically, is it just an Osmo base pair pool, or if it's an Atom base pair pool or UST base pair pool. But I think that maybe going forward, there needs to be more, even more decisions made around should we have a higher multiplier for the Osmo ETH pool, for example, or should we have a higher multiplier for just generally pools that are very important to the growth. And it's what we should be doing it. The challenge with doing it off of TVL or even volume in general is you're rewarding, you're giving incentives based off of where liquidity currently is. But what we really should be looking towards now is putting incentives towards where we want liquidity to go. And so if there's pools that we want more liquidity in because it's important for osmosis, that's where we really should be trying to prioritize a lot more of the incentives.
I think I tend to agree. I think that's the way people will start to put liquidity on pools that are important for the protocol is if you incentivize them. I think that also the signaling proposals for matching external incentives is also, I think, a good point, because it puts the projects to be more skin in the game. And be like, hey, we actually are sharing parts of our value with the Osmosis liquidity providers, and I think that's actually the matching of the external incentives is also a great way of distributing value for Osmosis users, Osmo holders, and maybe the multiplier on the Osmo base pair pool, I think is a very good point, because projects will tend to put more external incentives on the Osmo base pair pools.
Right, exactly, yeah. And I think like going forward, especially with the minimum, like the single hop, or sorry, the discounted multi-hop swap fees, I think there's gonna, I think we're gonna see more projects just only create Osmo base pairs, just because a lot of the need for other pairs goes away, unless there's like a strong reason where people believe that like the other, like a direct pool is better for like IL. I think otherwise, for the most part, most projects will only be will probably only create Osmo base pair pools and try to concentrate liquidity there going forward.
But if we go down this route, I think having a way of, so if all the projects have only Osmo base pair pools, that means that Osmo will be lifted up with all the value of all the other assets. But yet, don't you think that there will be some kind of systemic risk? Because if all of the assets are only paired with Osmo, then you get the risk where Osmo goes down 1%, all of the assets of the Cosmos ecosystem will go down 1%. You see what I mean?
Yeah, I mean, I guess this kind of happens a little bit on Ethereum based off of like with like ETH as well. Yeah. Like I said, I think that other assets will, it's on. The market will do what it wants, where it can create pools for other pairs as well. It's just that there's a number of reasons why one might want pairs with other pools with other pairs. So it's usually been because maybe there's less expected IL with that pair. So maybe you think that maybe a Juno CW20 token might have less expected to be more correlated with Juno than it is with Osmo. So maybe LPs would rather sit in that pool than in an Osmo base pair pool. So that's one like reason that's still valid. But basically, the multi-hop swap fee, one of the reasons has just been that like going through direct pools has lower swap fees than going through a multi-hop pool. And so that's why a lot of trades would be routed through those direct pools. And so this is just making it so that is not like a really good reason anymore. But there might be other reasons why people want direct pools still. For resiliency as well, like you said, like maybe maybe like Key wants to maintain its Atom base pair pool and Osmo base pair pool both.
Yeah. Our vision was to always have also a stable coin, base pair for our assets, because most of our investors, most of our customers come from the traditional finance. So basically, they want to see a price that is actually a pool that is pegged to stablecoin, and this is why I think and it's quite rare. We have both pools, UST XKI and Osmo XKI, that's quite similar in terms of liquidity size. So which actually sparked that need to build that arbitrage plot, because when Osmo goes up 5%, actually people start buying on the bots start buying on the UST XKI and then selling massively on the Osmo XKI, which actually prevents value to grow in a sustainable way, and also like there is depletion of value from both pools. When there is the Osmo that goes up, then it's this way, and then when it goes down, it's the other way around.
Right.
Having only one Osmo XKI pool, I see it quite dangerous for us. I think actually I find very attractive the fact to have only one pool, because that would mean that we could put all the liquidity on one single pool, and have less slippage and like a more concentrated effort to have depth in terms of exchanges and volume. The problem is still like being bound to one asset that is volatile is quite risky to us. Don't you think that other projects could have the same approach?
Yeah, I think that makes sense. I think in that case, people probably would want to create like stablecoin based pair pools for that reason. Just I think people want to create stablecoin based pair pools for that reason. And then I think just having the reduced swap fee on multi-hop actually just helps make arbitrage between the pools easier, because it's less expensive to do that arbitrage now.
Absolutely.
Hey, Réda, I just want to say to you, hey man, sorry I didn't put that on Commonwealth. I really apologize for that. And also anybody in the Osmosis community that I shocked with that. Also, Sonny, I have a question for you. Isn't part of the motivation between the new multi-hop prop to actually make it so that assets don't need, like, for example, stablecoin pools?
Well, yes, this is what we were just talking about. Was I think there's multiple reasons why stablecoin pools and other pools are useful. One of them has been that direct pools are cheaper than multi-hop, and basically we're just trying to patch that one issue, because after thinking about it for a while, we realize that there's really not a good reason why we have to be charging so much for these Osmo multi-hop jumps. But like Réda's pointing out good reasons why for an asset they might want stablecoin as well, so that they're not pegged solely to Osmo. So as an example, something that we've been noticing is that as the Juno price has been like decreasing recently, it also causes the Osmo price to decrease a little bit as well, because what happens is people are selling Juno for Osmo and selling Osmo for dollars, because that's the primary liquidity route out of Juno. And so it's interesting, because Osmo is this like sort of base pair for like the entire Osmosis system, which is like the primary liquidity for Cosmos. It makes it so that all the assets are sort of highly correlated with Osmo, and then Osmo is also correlated with price movements on the assets as well, which is a sort of interesting phenomenon. Where I guess we had thought about the other side, where we realized that every time Osmo goes up, all the assets paired with Osmo will go up as well. But we never really thought of it much in the other direction, which was like, hey, every time one of those assets goes up or down, that also causes Osmo to go up and down a little bit, because it is that primary liquidity route.
But I don't really see how UST pools or stablecoin pools would solve this, because assuming arbitrage is happening, it's exactly the same, right?
Yeah, so the question is, what do people use as their arbitrage quote currency, right? So if people use like the stable coin as their quote currency, which they probably would, then I have to think about it. Which way?
That's exactly it, Sonny. Actually, the arbitrage makes sense when you have one base pair with a stable coin. And what we saw in terms of behavior of the arbitrage bots is always a settlement in stable. So actually, value was always depleted in stable coin. And it's quite easier. So when we started building that bot, we actually were building an arbitrage bot that we're trying to front run the other bots. So we were actually reading the liquidity directly from the chain to see the depth and compare immediately both pools. We were only working on our pools, trying to protect our both pools. So basically, if you don't have a stablecoin pool for an asset, you are less victim of arbitrage because it's harder to evaluate. If you have, let's say, if XKI didn't have UST based pair pool, but had Juno, Osmo, let's say Akash based pair pools, the job for the arbitrage bot would be really harder because it will have to look at different values and between different pairs of, so Akash and Osmo, Akash and Juno, Juno, Osmo, Juno, Akash, to make sure that there's a route that actually makes sense to get value out of it.
But I also think it's kind of a different conversation around incentivizing pools and then like routing, because it's like, is it the role of Osmosis to incentivize, let's say for example, like I don't know, like key and UST pools. Like I think those tend to be a lot more strategic than Osmo based pools. So it's like how that should be accounted for in incentives, I think, is a direction that we probably need to pivot.
Yeah, so I think those things should be done by external incentives, and then Osmosis should, do incentive matching. But I agree that with that, like you're saying, Josh, that like with the strategic incentives for Osmosis, I think they really should be focused more on Osmo pools.
So yeah, I agree on that point. I'm even interested in seeing focus more on like the 14-day. I feel like the 1 and 7 are heavily weighted.
Yeah, hey guys, this is Will from Regen Foundation. I guess a few things to jump in on.
Hey, what's up, Will?
I had definitely been pushing for kind of increased incentives for 14 days on multiple discussions and previously, and I think superfluid is one of the things that does that, and I think people have talked about that too much yet. That effectively superfluid does bump up the rewards for 14-day folks, just in that you get the additional benefit of that partial Osmo delegation and the rewards from that. But something I wanted to bring up that I haven't heard a solid answer to yet is there's been some discussion on adding, well, I guess first just to say, Sonny, you had started this conversation off by saying, should incentives on Osmosis start moving in the direction of superfluid, to have kind of more of total incentives there and less using some of these other factors like trading volume. And there have been conversations of bringing new pairs into superfluid. I had posted on the Commonwealth discussion of the kind of Osmo Stars, Osmo Secret, Osmo CRO, just to ask, could we go through the details of kind of the tokenomics of superfluid just to understand the threat model? Because I recall when we had going to added the first pair, not all of the Osmo in your pair gets counted towards the staked amount when superfluid is enabled. It's just half or something like that. And I just wanted to ask about what are the actual mechanics. Say a pair crashes. Is there something to do with the 14-day window, that there's essentially a point at which the superfluid could be overstating the amount of Osmo that's actually delegated? Or how does that actually work?
Yes, exactly. That's that's exactly it. So what happens is that, refresher on how proof of stake works is a malicious validator set can cause a malicious hard fork from any time within the unbonding period window. And that means that's why we have unbonding periods, is so that we can slash them. Even so, let's say the unbonding period is 14 days, someone does something malicious from a fork from like 10 days ago, we can still slash them today. But now the problem is that we can only slash them with the tokens that are staked today, the economic value that's staked today. And the way that superfluid staking works is that what makes it different than normal proof of stake is that the economic value of individual staked positions can change over time depending on which pool it was superfluid staked with. So as an example, so what that means is, let's say you have a token like, you have a pool of Osmo Foo. What happens is, if the Foo token crashes really bad very quickly within like an unbonding period, you can have it so the economic value of those LP shares is really low. But according to the chain from a point in time 10 days ago, the economic value of that Foo LP shares is quite high, and it had a higher percentage of voting power. And so they could potentially, if it's significant enough, they could use that to do Byzantine actions at that point from the 10 days ago point, while they're only going to get slashed today. But like, the amount that's getting slashed is not, the value that's getting slashed today is not as much, because the value of those LP shares has dropped. So this is why we have that risk factor, which is currently set at 50%, which is like, okay, we're only, treating everything as 50% of its actual value. So even if a token drops 50% within a 14-day period, then we're okay. So basically, that's one thing that needs to be fixed actually in superfluid, which is that risk factor really should be on a per pool basis. Currently, it's just a single global parameter that all the pools have a 50% risk factor, when really maybe different pools should have different risk factors, and we can assign higher, risk factors to more risky pools. But yeah, so that's just why.
And essentially, if you fall below the threshold of that risk factor, then the game theory of BFT starts getting out of whack, where people have more votes than they should on that.
Yeah, level. Exactly. And so, basically, what we mostly have to be like cognizant of is, things that have high rug potential, I would say. So, as an example, we could say something like, Huahua, right? I mean, I love Huahua, but, it is thinking from a pure security perspective, like, it's worth noting that the anonymous development team behind Huahua currently holds like 80% of the supply, which they do this because they are planning on distributing it and like using in like future airdrops and like incentives and things like that. But like the fact that like it could be a potential rug, right? And that's from us, I don't think it makes sense to add the Osmo Huahua pair to to superfluid right now. But at the same time, there's also a similar argument to be made that one entity or a few entities own a significant portion of a lot of tokens, to be honest, right? Like I would say, like Luna, for example, a lot of the tokens are held by like one or a couple entities, and that's does that count as high rug potential? Maybe, I don't know. So it is sort of like a governance decision that needs like more subjective decision making here on like which pool should be activated. I think by having more flexible risk factors for each pool, that will help. But I do think that like right now at the current moment, I think governance can start activating a lot more of the tokens. I think Regen, for example, is probably one that should be activated. A lot of the tokens that have been around on Osmosis for a while probably should have their superfluids activated now.
So just to add one thing to that. I think right now the breaking point with the risk factor is that it would fall more than 50, like the value of the LP share would fall by more than 50% in one day, because we readjust the amount of staked Osmo based on the LP share every epoch. So it's like it's only if it went, to like 30% of the value that you would then have more Osmo staked than you actually have value backing it.
Yeah, but you can cause a fork from any point in the bond within the unbonding period.
Yeah, that's true, I suppose.
Wait, Sonny, I'm not a big fork guy, but when you say you can cause a fork from anywhere within the unbonding period, you're not saying that you can like retroactively cause a fork.
Yeah, you can. That's how you can kind of retroactively cause a fork.
Right, that's the whole point of how you roll back the chains.
Yeah, you need a lot of Byzantine validators, and it would be slashable. That's sort of the point, is that in a system like Tendermint, you can cause a fork, but you're going to have a massive slash involved. But what we're trying to do here is make sure that the economic value of that slash amount is high enough.
Right, but and you would need, is it 33% of the validator set to do the fork?
Yes, it depends on the exact attack, but yes, some attacks require 33%, some require 66%.
Okay. Well, yeah, 66 would be a very high bar. I guess.
So,
yeah. Okay.
The only part the part that matters for the unbonding period, though, is that if you're attacking from outside of that, then you could unbond your money and then commit the attack, and your money's not at risk anymore. But like if it's within the unbonding period, then you haven't left the pool. So like it's just a question of how much value you actually have within the pool.
Sorry, one more time. What was that?
Like what I'm saying is I don't think the unbonding period really matters.
Every time there's an arbitrage loop.
That's interesting. And how would the arbitrager signal himself as to benefit from the discount?
It would be basically in a single transaction. If you're doing you can do multiple hops in a single swap. If you're doing a series of swaps that start and end with the same asset, we would treat that as an arbitrage loop.
Okay.
But I mean, I guess you could just do another swap to UST after that.
Yeah, you could.
I guess, yeah, we're paying people for making it the default, though.
Yeah.
Also, one topic about the incentives as we're moving towards the multi-hop discount. Don't you think that it would make sense to, and I think that would be beneficial for the whole Osmosis ecosystem and pools and everyone, to make Osmo stronger by incentivizing massively the Osmo UST pool, so that people provide a lot of liquidity based to with a stable coin, which actually would make Osmo stronger towards the falling of other assets like Juno, for example. We have a big pool of Juno or Luna, to avoid Osmo to suffer from other assets losing a lot of value.
Yeah, I mean, so the Osmo UST pool is currently already the second largest pool after the Atom Osmo pool, and I imagine that, yeah, we can add more incentives to that pool, but I think the other thing would be that we should consider, we should probably put more incentives as we get more stable coins as well. So we'll have USDC pretty soon, and we probably want to make sure that we are have a lot of a high liquidity pool with other stable coins as well, other than just UST.
Yeah, so the sum of the liquidity pool with stablecoin will be higher. I actually, as long as there is many pools with Osmo backed with stables, actually we can add them up because the arbitrageurs will be doing the work.
Yeah.
So I guess on that note of other stable coins, I feel like I am out of the loop right now on the bridge off and like what Ethereum bridge we're going with. I know there was going to be some Kepler upgrade to do something fancy with voting. Just curious to hear if there's an update there on when we'll hear more there.
It's been mostly paused until we can get the Frontier site up and running. Basically, we want to make sure that like different bridges have an opportunity to at least have an integration and show their integrations before we put it up to a vote.
So we're targeting
we'll
the Frontier
prototype all the bridges first.
Wait, we have a bunch of people talking at once. I just want to wrap this up and then because it seems like Josh had something.
We're trying to get the Frontier website up and running and finished by tomorrow. If not, at least by the end of the week, it should be ready. So, just a couple of days.
Any questions from who else was in the audience?
Hello.
Welcome.
My question is, when ERC20 tokens on Osmosis?
Basically, as soon as the bridges are integrated into the Frontier website, basically, yeah.
And when may that be?
Tomorrow
Fingers
or
crossed.
end of the week?
End of the week.
All right, beautiful. KYC is anti-DeFi. Thank you.
Thank you.
Thank you, Financier.
PG?
Kind of two questions. One is the risk we were talking about with the pools and whatnot. Would interchain security help some of those higher risk ones lower their risk levels? Being question one. And then question two, I actually forgot. So you can just roll with one.
Would interchain security help? I don't know if it'll help with the risk levels of superfluid exactly. I think it would more just help with, it could help secure Osmo itself or secure some of the chains connected to Osmo. They are, I think, superfluid / interfluid staking and interchain and like shared security are somewhat orthogonal and complementary, but I don't think it would really change the economics of superfluid.
But Sonny, and maybe you just stepped in it, but it seems that having the interfluid in play might help stabilize, because we're talking about with the other asset tanks, and if more of it's staked, I don't know. I'm just wondering, thinking out loud.
Yeah, I'm not really sure.
I mean, you don't know if the interfluid staking was in play. Yeah, I guess whatever. That's another world.
I guess I don't fully know what the interplay between interfluid and shared security would look like.
Right. Oh no, I wasn't talking just about shared security, but just about like avoiding the problems of that we're talking about, of simply, superfluid being, having this risk.
I don't think it really changes that, to be honest.
Okay, that's fair.
But what could change is that, you with interfluid, LPs in a pool that like isn't approved for osmosis superfluid could be approved for like other chains interfluid, right? So let's say Chihuahua, we don't approve Osmo Huahua for osmosis superfluid, but that could be approved for Chihuahua interfluid and not be and still be earning rewards there. So I think that's that's the one thing, but yeah. I don't think it changes the security model.
Right. But that does, I guess that does bode well for other chains that maybe could benefit from the increased security of that.
Okay, do we have any other questions?
Question 2 actually came back to my mind. So with the bridge conversation, will the nomic bridge be considered? I know we're not choosing certain ones just yet, but is that kind of in contention at the moment?
To be honest, we haven't really started thinking about the Bitcoin bridge yet. It's just, yeah, it's just farther down the road where it's like, I mean, once there's some working solutions, then we can like start to think about it a little bit more. But at the moment, I don't think nomic bridge is live. I know Axelar was working on a bridge too, but for Bitcoin, and they got quite a bit far along that using like threshold ECDSA, but since the last Bitcoin upgrade, they added Schnorr signatures, and using Schnorr signatures are much easier than threshold ECDSA, and so I believe the Axelar team decided to sort of scrap their existing work and are going to rewrite it for making use of Schnorr signatures. So that's why the Bitcoin bridge from Axelar has been delayed. So I don't know. I guess once the nomic bridge is live and working, then we can evaluate it. The other thing is, I know nomic is written in this like other framework that's not the Cosmos SDK. It's called Orga, and I don't know if there's an IBC integration for Orga yet. So I guess we would need to wait for that as well.
Got it. Yeah, that makes sense. Thank you.
Hey guys. I had not a question, more of a general comment on the state of governance and like some of the things that I think Prop 188 and other propositions have revealed. I think is that are like governance proposals on blockchains are just as vulnerable to the types of failures that we've seen that we see in our like societal governance, right? Like governments and democracy. And I think that as a community, we probably should be having conversations about how we can eliminate some of the issues that exist here, because I think that governance, on-chain governance, probably can be abused, and I'm not saying that necessarily there was like abuse here, but probably can be abused to meet ends that don't benefit the ecosystem and the community as a whole. So I'd love to have an open conversation with the community about how we can improve the processes around, say, putting proposals on chain, properly discussing those proposals before they end up on chain, and minimizing the risk that governance proposals could negatively impact the ecosystem.
Sebastian, I'd like to comment and just tell you that I fully and strongly agree. So all right, why did I put that proposal directly on chain? And Réda, I'll just say to you directly why I did that. Okay, and I think you probably realized why I did that. I saw activity that looked like wash trading aimed at increasing incentives. And then so I bolted right for the chain, and I thought, let's deal with this. The situation was more complex, and I violated a social norm, or I think that's what we've been calling it, is a social norm. If you go to Commonwealth, Sebastian, you'll see a governance proposal that basically it instructs delegators and voters and validators to vote no with veto on any proposal other than a software update proposal or one of the regular proposals that Unity Chaos does to adjust pool incentives that has not been on Commonwealth for at least 3 days. Because from my stance, basically I thought I was doing the right thing, and I feel like we should just try and create some hard and fast rules about that.
Yeah, that's a great idea. I haven't seen that proposal. I'll go check it out. Yeah.
Cool, man. Thank you. I imagine that there's more that we can do. Like, for example, Sunny and I We talked about a constitution. I think those are going to become incredibly important.
I think that would be a great addition for the whole Cosmos ecosystem. I think the society that we live in has evolved over centuries and centuries to get to the point where we're at, and we can live together peacefully. And I think that the fact that we have constitutions in countries is, I think, a norm that maybe we can take. And just the fact that we are in the blockchain world where everything is transparent, we can't have the bad stuff that the society that we live in has brought to us, with like people that get bribed, that do bad things on the back, etc., etc. But if we can put the rules of how we can all work together and how things needs to be done, I think it would be great. And I'm sure that we all here in the Cosmos ecosystem are here to build, create value, and grow all together. And putting the rules, I don't think it's a bad thing. I think that having rules is also a way of like how we collaborate and how we create more great stuff together.
So, that's the second thing you've said I strongly agree with. That, like, it provides a framework, right? It provides intention. And the Constitution doesn't need to be the same on every chain. And I'll let Sebastian make his point.
No, sorry. There's a bit of noise. I think constitutions help. But let's also recognize that constitutions aren't perfect. Case in point, countries don't have the ability to do a coup in their constitution. However, coups happen all the time, or at least we've got many examples of political coups that try to overthrow the constitution. So constitutions are great because they codify a certain set of rules. If we can codify those on chain, even better. But they're merely structures that enforce social consensus and delay damaging actions.
Yeah, like I think that what you did, Jacob, I haven't even seen this new Commonwealth proposal about vote no with veto if prop hasn't been on chain or hasn't been in Commonwealth for at least 3 days. But my main concern is just, if we're going to set up these kinds of rules, it should be in a way that everyone can find them.
The way to find these, and actually you do raise a really good point, but I guess to me anyway, and it's interesting because I do truly believe that this stuff is syncretic. Okay, I believe that every validator that I've spoken to interprets this stuff a little bit differently, but to me personally, that which is on the chain is canonical and like must be followed. And that's why I'm making this gov prop. And then if you want to know the body of osmosis, say law, right? Well, we would go and look at the past proposals, accumulate them, and then act accordingly.
Who in theory would act as, like, for a USA example, the Supreme Court type of, to like uphold the Constitution itself to the chain?
That's a great question. Yeah, that's a great question. Is the role of validators to be some kind of like delegates, deputies that represent and have the job of being like some kind of politicians that read into the proposals, into the law, and decide for the whole community? Or do we have to elect a group? Like in France, you have that, all the old presidents, when they finish their duty, they end up into the council of the wise. Like you have the old presidents, all old, that are part of the wise council. It's the last council that is reached if you want to pass a new law. Do we need to have a council of the wise people of a chain? That's actually I think it's a great conversation to have.
I like the name.
I think that validators kind of serve that role now. And I should say that as time goes on, I've felt more and more that like the validator role is becoming more political. And I would love actually to maybe even next week on the Osmosis updates from the lab, have a discussion on like, I feel like we have to have a binary choice here. Either validators do politically represent the community, and Réda, I think, council of the wise, that's a reasonable way of saying it, because we most certainly are elected, and do political stuff, or we remove the proxy vote function. And then validators no longer represent their delegators, but there's just, I think, some serious questions around user apathy.
Yeah, I definitely agree that this probably merits continuing on another updates as we've crossed the 1 hour mark. There was something from okay, I see Réda, but also someone, Louis, requested to speak. Do you have a question, Louis or Lewis?
Hello? Can you guys hear me?
Hi. Yes, we can hear you. Welcome.
Hey, how's it going? So I'm really actually new to the whole Osmos ecosystem, and I'm trying to figure out how I could stake some UST into like the whole Luna network. And I noticed that like I could do that on the Osmos, like the trading, I guess, platform. But when I go to sign on to my Kepler wallet, it's not there. I don't know if this is the right place to ask this question, but I'm whole new to the whole blockchain network, so maybe you guys would be able to help me out.
Yeah, I would definitely direct you to our wildly informative admins who are on all the social channels. If you go to Telegram, if you go to Reddit or Discord, seek out an admin in the public channel, and they'll be able to help you out.
Okay.
Okay?
Okay. Cool, I appreciate it. Thank you.
Yeah, for sure.
And welcome to the ecosystem, dude.
Yeah, absolutely. Welcome to Cosmos and Osmosis. Happy to have you here. I see Cosmo Mike has his hand up. What's up?
Yeah, awesome, man. How you doing?
Good. Welcome.
Good. Thanks. So yeah, I've only been in the space for a little while, but I just wanted to know if, like, I just saw on CoinMarketCap, we are in about, Osmo in terms of price action is on a 30-day decline. I just wanted to know, like, I thought like a bonding periods would actually have some sort of effect on how, that it like kind of reduces like when market crashes, like a lot of selling. But I just wanted to know your thoughts on like how like bonding periods would actually correlate to price action, if that makes sense.
Sorry, wait, one more time. So what was the question?
So the question was, like, obviously the Osmo price has been falling, it's been in a 30-day decline. And I thought, like, because like you've bonded, say that a lot of people bond for 14 days, wouldn't that help like the price stay up a little bit more than as opposed to an asset that doesn't have bonding, because it would reduce like sell pressure or something, if that makes sense?
Yeah, I mean, that's sort of part of one of the reasons that there is bonding for LP shares, and making sure that like liquidity doesn't leave as soon as the going gets tough, but rather the liquidity stays available on the platform. So yeah, I think that's that was one of the main reasons to incentivize long-term liquidity over short-term mercenary liquidity.
Yeah, I think it is in play. Not that this is an answer to your question, but it's also one of the things that attracted me to Osmosis in the beginning.
Sure, but the asset has been in like a 30-day decline.
You're saying 30? I just want to make sure I'm getting your accent. 30?
Yeah, I'm just saying, if you just look at like something like CoinMarket, if you switch it to like 3 days, it's gone from what, 10.2 to 7.2. Like it's and I don't think other assets have actually fallen that hard. I just thought that bonding period would help it up. I mean, still love Osmo.
I mean, I think the entire market is sort of just down, and the market moves how the market moves. We don't really spend too much time following short-term price movement. Or sort of more just working on our long-term roadmap, and
Cool. Laka. Thanks for that.
Yeah. Omniflix.
Yep. Thank you, Sunny. Thank you, everyone. I'm Sislav Abhishek from Omniflix. I just have two questions, both connected. Sunny, like we are planning to engage with the community with a few proposals, where we request for a loan to bootstrap the LBP and partially fund it ourselves, due to us being a validator on the network. For that to happen, we're looking for a case where the underlying question here is like, when LBP v2, and do you think we should wait for that? We can wait for a few days. We launched in February and are running entirely using the fee grant module. So we have 44K transactions, 8K IPC. A few collections that were listed exclusively in Osmo also got sold out in NFT. So we're there right now. So do you think we should wait for the LBPV2 or plan with LBPV1?
Well, so actually, it's great that you guys are asking this, given that. So first, some background. The primary work on the chain side of LBPV2 is mostly done. Just needs some review, but really the biggest bottleneck has actually been more on the front end side, where we haven't had time to build the front end for it. And it's a little bit deprioritized right now, just because I think we're kind of on the front end team. We're sort of more focused on shipping some of the bridge integrations, as well as the refactor that's coming, and isotonic and things like that. So it's like we don't think that we will have a chance to get to building the front end for a couple, probably at least realistically, like minimum 2 months. But given that you guys happen to be the creators of one of the most popular front ends for interacting with Cosmos dApps, perhaps maybe we should probably just talk about this separately. But we'd love if you guys are interested in building the front end for it and being the first user, I'm sure the Osmosis chain can. The new grants program that will be up next week can probably even give grants for that, and that will also be a way for you guys to get some Osmo to bootstrap the LBPV2 and stuff. I don't know. Maybe we can talk about it offline.
Oh, that's neat.
Okay, great. Thanks for chiming in, Omniflix.
Hey, thank you, Sunny. Definitely would be interested, and we'll discuss more about this offline.
Cool.
Thanks, Kevin.
Cool.
Thank you.
And then I guess the last one, Uni Whale.
Hey, Sunny, Kevin, really enjoying this. Two quick things. So one is I'm gonna say ETH maxi, but I'm really involved in Ethereum, and I've been loving following the last couple of months the Cosmos ecosystem, thanks to a lot of these great educational resources. And it's crazy that there was a Cosmos Hub Twitter space at the same time as Osmosis. So that's quite bullish, although I was trying to listen to both at once, admittedly. But I just want to make a comment around the Constitution. And I realize this merits a separate call, but I just want to point out that sometimes there's really great intentions, but it's the second, third, and fourth order effects when you have a Supreme Court or whatever you want to call it, and the way ambiguous wording can be related to on-chain governance. I just think Osmosis is so amazing that I hope there's just a lot of thought and just behind from both sides. And I know Daniel's taking this as well, thinks about it. But I just want to throw them out there. And thank you so much, everyone.
Thanks.
Yeah, thank you. I think that's a good point. I don't know. I know it's in my mind the moment we open the topic of just like, what is all the cascading possibilities of having a Constitution plus something like a Supreme Court. I mean, it's a lot. It's a lot of implications.
Yep. Cool. I think that's all that we have time for today.
Okay. Thanks, everybody. We'll certainly be revisiting this. Yeah, it's not like we've fully solved the incentive issue, but I feel like this has been really clarifying. And thanks, Réda and Jacob. Everyone for coming on for Unity.
Thank you all for having me. It was really a pleasure to participate. Thank you, Sunny. Thank you, Unity, Kevin,